BOFA Securities has come out with their Q3 earnings report just ahead of the very busy week that we have. Now remember, the Q3 earnings season is what is going to be on everyone's radar, and just before of the upcoming budget, all eyes this week is going to be on Q3 results. So Amish Shah of BOFA Securities has come out with a report for BOFA Securities highlighting all of the expectations that they have built in going into Q3. Now what they're saying is that as far as the erosions of profits that were seen in the past couple of quarters due to the disruption of COVID, what they're saying is that sequentially erosion of profits have come off for most of the companies under their coverage, as they have managed to weather the COVID-19 crisis quite well. What they're saying is that their estimates suggest a 4.5% year-on-year growth as far as Nifty is concerned, as far as Nifty earnings are concerned, and what they're saying is that if you exclude the financials, it could be as high as 4.9%. Now within the Nifty sectors, according to them, materials, telecom, consumer discretionary and healthcare are the ones that are expected to deliver positive earnings growth, while PAT erosion could be quite severe in energy as well as industrials. Now one particular sector that they really like and they believe will deliver a very robust set of results is Indian steel companies are expected to report a very strong profitability rebound according to BOFA Securities. This is mainly going to be supported by higher domestic steel prices and expansion as far as their spreads are concerned. Also, the other sector that they believe that could do quite well is the Telecom pack, and they believe that it could stand out as a growth driver due to relaxation in one of AGR dues that, if you remember, had led to significant losses previously. Now what they are saying is that the profit trajectory is expected to continue in private banks, staples as well as pharma, and what they are saying is that despite the black swan event of COVID-19 that potentially drove first quarter earnings negative, they are expecting a continuation of PAT growth into third quarter FY21 for consumer staple companies, Godrej Consumer, Marico and Britannia. They're also expecting positive trajectory for Cadila, Cipla, Torrent Pharma, Glenmark Pharma, and Divi's and Dr. Reddy. In fact, even financials like ICICI Bank, HDFC Bank, LIC Housing Finance and ICICI Prudential, as we've also already seen in the case of HDFC Bank, they're expecting positive trajectory. Now, what they're saying is that metal stocks are most likely going to benefit near term due to the improved sales mix and product mix, with rise in higher margin demand from retail, autos as well as MSME segments post the easing of the lockdown. So now what they're saying is that EPS surprises are most likely in financials, industrials and staples. They are expecting these sectors to positively surprise versus the consumer estimates. So what they're saying is that keep an eye out for metal stocks, keep an eye out for telecom. Positive surprise could be seen in some of the sectors. So watch out for the earnings season and watch out whether some of the predictions made in this report does turn out to be true.